Hello everyone. So let us continue with our discussion. And till now we had a very good discussion on the cryptocurrencies, their characteristics. But now the point is investment. How we can invest in this cryptocurrencies. See, the point is that here we are going to talk about the basics, the different exchanges, and the risk involved with the cryptocurrencies. And one more very important, that how people can invest in these digital assets like bitcoins, like ether, or any other cryptocurrencies, and which platform they actually use to buy and sell these cryptocurrencies. So when I say investment, it is possible in two ways. One is direct and another one is indirect. Clear? Now when I say direct, means you can invest of your own. Okay, just like you will install their app, put your money and buy the cryptocurrency, and there will be a wallet in which it will be stored. Clear? Now what are those apps? It can be WazirX, okay, it can be coin DCX, coin DCX, it can be Coinbase. Clear? There you can directly buy the bitcoins, ether, or any other cryptocurrencies, and there will be a dedicated wallet in which you can store these cryptocurrencies. Clear? Now how these cryptocurrencies will be stored? See, basically there will be a dedicated special key, okay, that will be designated to the cryptocurrency, just like a password, and that will give you the control over your cryptos. Clear? Means think it like that you have your cash, you are keeping it in your locker, and you are responsible for it. If you lose the key, you will lose the money. Clear? So this is the direct way of investment. Now what is the indirect way of investment? You can buy it through mutual funds, or the ETFs. So there are many funds who are actually investing in the cryptocurrency, so they will take the money from you and then they will invest your money in the mutual funds, or we have the Bitcoin ETFs. Clear? So it's similar to the shares. We have the mutual funds of the shares, we have the mutual funds of the ETFs as well. So this is very easy and it is very safe for the beginners, because this is not direct. So you don't have to do your own research that in which crypto you should put your money, or you should not take care of these cryptocurrencies special keys. If you will forget it, you will lose everything. Clear? So the point is clear that yes, if I have the app, I have the money, I can buy the crypto and I can store it in my wallet. Second, if I don't want to do all this, I can give the money to the mutual funds, they will buy it on my behalf. Clear? So where do people actually trade the crypto? Clear? So there are basically two different exchanges. Okay, number one is your centralized exchange, CEX, centralized exchange, and second one is decentralized exchange. Centralized exchange and decentralized exchange. Clear? Now what is this centralized exchange? They are nothing but the private companies. They actually run the crypto trading platforms. Okay, like what are the example? Binance, okay, Coinbase. Next come to my mind is WazirX, okay, and FTX. It got collapsed later on, so it's not existing right now. So these are the centralized exchange which are actually privately owned. Okay, they have created by, say me, I have created one exchange, come and trade on my platform for their cryptocurrency. So how they actually work? There is a dedicated app. So come sign up, log in with your username and password, invest your money, put your money, hardcore earn money, whether it is in rupee, euros, or dollars, put that money in the wallet. Now these wallet real money will be used to buy the cryptocurrencies. Now when you sell, these cryptocurrency will be converted again to the dollars, euros, pounds, or rupees, and then take it back into your bank account. Clear? So the problem over here is that you do not fully control your crypto. Clear? They are stored on their server, means it's a coin-based server where all these cryptocurrencies are stored. So if this system got hacked, clear, or if the company does some fraud, your money will be at risk, because everything is stored in this database. And if this will be hacked or done a fraud by the company, you are lost. There is no rules and regulations, not monitored by the government, not monitored by the central banks, nor any government officially exchange. Clear? So the real example was this FTX. Just now I said na, it got collapsed. So what happened in 2021? FTX was one of the biggest crypto exchange. But what happened in 2022? The founder, they have actually misused the customer funds, and when the crypto price got crashed in 2022, the company had no money left. Clear? So FTX went bankrupt and people lost billions. See, it's not only millions. I am saying people lost billions in this exchange. So invest your money very carefully. Clear? Otherwise you will lose everything out of it. Now the second is decentralized exchange. Clear? Now these are not run by any company or any central authority. Clear? So what are the famous example of this? There are two famous example. Number one is Uniswap. And second one is Sushi Swap. Clear? They are not run by any private company or any central authority. Clear? So what happened over here? Very important to understand. So basically over here is no middleman, no one like WazirX or Coinbase. So it's like that you have your own crypto wallet directly and you trade peer to peer, means from one person to another person you trade directly. Clear? So it's like that you don't need to create any account, no need to create any account, no middleman. Clear? So if one of the system got hacked, suppose my system got hacked, clear, the exchange will keep on working because exchange is nowhere. Clear? So everyone have their own system located and they are trading it from their own system. Clear? So actually what's happening, the process is like that, it is running on multiple system across the world. So if you'll hack one, it's okay, thousands are still working. Clear? But the problem is that if mine got hacked, there is no customer care or helpline because it's my system and it got hacked. I lost all my cryptocurrency because of the hackers. Are you understanding? Decentralized, try to understand the meaning now. Centralized means what? This is a server. Now every customer is trading via this single platform. They store everything over here. Clear? Centralized, center. Clear? But decentralized means everyone have their own center. They have their own center and now they are trading it through this. Now they all are trading it through this. So this can be hacked because the data is over here, the cryptocurrency is over here. So this got hacked, you will lose all your cryptocurrency. Are you understanding? This is the process of decentralized exchange. Clear? Now I am talking it from the very first session that there is huge amount of risk in multiple areas, but the major risk, if I'll tell you, the major risk is the price manipulation. Okay, people can actually pump and dump the price. Okay, they can promote a coin on the social media to push up the price and then sell it suddenly, and that actually crash the price. So you will be at loss at that. Clear? And we all know that these cryptos are not regulated. Okay, so most of the crypto exchanges, they are not fully regulated. So if someone cheats you, no one can protect you, neither SEBI, neither RBI, neither Federal Reserve or court, because you are of your own. Clear? There is no rules and regulations specifically for that. Are you clear with this? Now the point is, now I'm going to dig inside the direct investment as well as the indirect investment in cryptocurrencies. Clear? So one thing is clear, direct and indirect means you have your own app and then you can invest it directly, and indirect means you buy it through mutual funds or buy ETFs. This was just an overview, but now I'm going to dig inside. Clear? Now when I say direct investment, means you personally buy and you personally own the cryptocurrencies. Clear? Like you can have your own bitcoins, you can have your own ether. Clear? And you can record your purchase directly on the blockchain. Okay, what is that blockchain? It is a public digital ledger. Clear? Examples I have given you. If you want to buy the bitcoins and ether, you can go to the crypto exchange like WazirX, Behance or Coinbase. Clear? If you want to purchase NFT, okay, for that we have a separate platform. The name of the platform is OpenSea. This is the name of the platform. From here you can purchase NFT, okay, whether it is an art or music or anything, clear? Or if you want to invest in some IPO, clear, but with the help of the crypto, then it is ICO, that also we have discussed before, okay, that is initial coin offering. This is also similar to your IPO, clear? Now these all are recorded in a blockchain, which we have discussed in a very first lecture, the blockchain, clear? Now the problems, okay, that is the major point, the problems of the direct investment: frauds and scam, clear? Some ICOs are fake, they will take your money and disappear, okay. If I'll tell you the example of that fraud and scam in terms of ICO, it is a bit connect, okay. They have taken thousands and crores of money from the investors, and they have taken that money, and then they disappeared, okay, they are not anywhere now. Another one is pump and dump schemes, okay. Influencers on social media, they sometimes artificially hype a small coins, people buy them, price goes up, and then their insiders, they sell it immediately, but you are the one who failed to sell, and you will lose your money, clear? Then we have is a losing the wallet key. You have your wallet and you lost the key. It's like you are losing the money inside your locker, okay. Now you don't have the key of your locker. So in order to get the access to your wallet, you need to have a special pass key. If you lose that key, you cannot get your money back ever, clear? And it is estimated that 20% of the bitcoins are stored in the wallets, but people have actually forgotten their key. This is the point, clear? And the last but not the least, that is the whales actually control the price. Means some coins are actually held by the big investors, I call them as a whales, okay. They can easily move the price up and down by selling or buying in the large quantity. Are you clear? The direct investment in terms of coins, in terms of NFT, or in terms of ICO, so directly you can do it via multiple investment sources, whether those apps or clients, clear? Second, very important, where I have just discussed the ETF and the mutual funds, but there are some other options. Number one is, write down, crypto coin trust. Crypto coin trust. Crypto coin trust. Basically, you buy the shares in a trust, and that actually holds the large amount of bitcoins and ethereum. Means this is a trust, okay. They have a huge amount of bitcoins and ethereum in this trust. Now you hold, say, 5% of this trust. You are the owner of this trust, and your ownership is 5%. So indirectly you own what? Indirectly I own the cryptocurrency, clear? So the example of this trust, write down, it's a grayscale bitcoin trust. Grayscale bitcoin trust. Grayscale bitcoin trust, clear? It's safe, but they actually charge huge amount of fees from you, clear? Second, we have is a future contract. Just like in the stock market, you can buy and sell the bitcoins futures, clear? And who offers that? Chicago Mercantile Exchange offer these contracts where you can buy and sell the future contracts, clear? And these are cash settled, and they're often used by the professionals and traders to make the profit of day and loss, similar to those equity futures, clear? Now apart from this trust, we have another option which I have discussed, futures. Second, which I have discussed, is the ETF, exchange traded funds. Now the fourth, which is important, that is the stocks which are actually dealing in crypto, and you invest your money in those stocks. It's like you want to invest in the crude oil, okay, but you don't want to invest in the crude oil, you invest it in a oil producing company. So you purchase a share of the oil producing company rather than entering into the contract of crude oil, clear? So who are those company? Tesla, okay, they have invested a lot in the Bitcoin. Coinbase, it's a crypto exchange. Then another one is the Riot blockchain, clear? So you can invest in their share, okay, because they do the mining of the bitcoins, clear? Similarly, we have the hedge funds as well for the cryptocurrency. Okay, they do the long short strategy, they do the quant trading and Bitcoin mining for extra returns. Clear? So these are the different areas where you can actually invest your money. Multiple channels are there of investment in the crypto. Clear? Now, the next point is asset backed token. So imagine that you want to invest in a gold or real estate, okay, but you do not have 50 lakhs or 1 crore to actually invest, because you know that if you'll go for buy a flat or buy a land, it will cost in crores and you don't have that. Clear? Now, what if you could own a small piece of that land? Means try to understand that this is the whole land. Clear? And what if you can hold only this portion of the land? Clear? Means a small digital piece of that property or the gold bar. This is the gold bar, and what if you will hold only this portion, like owing 1% in this particular flat or 1% in this gold bar? Clear? This is asset backed tokens. This is asset backed tokens. Clear? So over here, this is your asset. Rather than owning it fully, you can even own the portion of it. Okay, it can be gold, it can be oil, it can be real estate, either it can be the share of a company. There are many shares whose value is way too high, say $15,000. Now you don't have that much money to buy even a single share. So what you will do, you will buy say 1/4 share by paying only 10,000, 12,000. Clear? Dollars. So this is how your digital tokens will represent the ownership in the real world asset. These are the real world asset, but the benefit of this digital token, you can own a portion of it. Okay, a part of it can also be owned by you. Clear? Now, the point is gold backed token. Write down number one, gold backed tokens. Clear? So there are some companies, they actually offer these tokens which are actually backed by the real gold, and it is in a vault. Means there is a vault. In this they have 100 kg of gold. Now there are many investors have invested their money. Some are owing say 1 gram, some are owing 10 grams, some are owing say 1 kg. So it's totally up to them. Clear? But it is backed by the real asset, that is the gold. Clear? So PAX gold, we call this as PAXG. Clear? It is equivalent to 1 ounce of gold which is held in the wallet. So how many PAX you own? It is equivalent to, suppose you own 10 PAXG, it is equivalent to 10 ounce of gold. It is equivalent to 10 ounce of gold. Clear? Are you understanding the whole scenario? Now, what is the benefit? Fractional ownership, where you cannot buy the whole property or you cannot buy the whole asset. Very high liquidity, because small portion of it can be easily bought and sold. Transparent. Why? Because blockchain records cannot be changed, so ownership is clear. And very low cost, there is no middleman like agent or broker, and hence the fees is also very low from the regulation point of view. So most country treat these tokens as securities because they are actually linked to the real value. Okay, so company issuing these tokens, they must follow the rules which are specified by the exchange or the government of that particular country. Clear? So how it is actually done technically, if you'll ask me, means how they have actually designed it. See, most asset backed tokens, they are issued on the Ethereum network, that also we have discussed before. Okay, and they actually use the term called smart contract. Okay, so computer program that actually runs on these blockchains, and they are enabled on P2P. We call this as peer-to-peer interaction. There is no bank, no broker, nothing. Someone wants to buy, someone wants to sell. Okay, do it directly. No need of the middleman. Clear? Then what is this DeFi? What is this DeFi? We call this as a decentralized finance. This is decentralized finance, basically a one step ahead from where we are, and DeFi is a one step ahead to that. Clear? Means from these smart contracts and the tokens, the whole new concept came, the DeFi. DeFi stands for the decentralized finance, basically a system that offer the financial services like lending, it can be borrowing, it can be insurance, it can be trading. Clear? All without the bank, using the decentralized app called DApps. Clear? So basically a platform which will give you the right of lending, borrowing, insurance, trading, whatever you want. Clear? So if you'll ask me the examples of these apps which are right available in the market, Aave, okay, it is used for crypto lending. Clear? Compound basically to earn the interest on the crypto. Then we have is Uniswap is for token swapping. You want to transfer your token from one person to another. Are you understanding the point? So with this we have completed all the points with respect to the investments in the cryptocurrency. Clear? Okay, so I'm keeping this much in this lecture, and I think one more point is left that we will cover up in the next lecture. Okay, thank you.